They say technology makes our lives easier. For work, to learn, to travel, to communicate. But there are things that machines cannot yet do. Things as important as engaging, putting themselves in your shoes, having intuition, or making intelligent decisions. An increasingly technological world, we need professionals who provide intelligent solutions based on their know-how. Because there are things that technology cannot yet do for you. The human tech.
Audio, Ignacio, el audio.
Good afternoon, everyone. Well, sorry about this. Thank you very much for joining us today. We're very glad to join you and be able to give you good advice, proper advice, reminders as well, because of the compliant tax laws in Spain for those of you who are resident in Spain. Okay, let me just give you a brief summary here. And I'm going to make it a bit easy for you to understand. Okay, we're going to have a chat on the right-hand side. You can tell us where you're contacting us from. I would like to say hello to our clients and friends here from all around Spain. And today we're going to have on one hand side, we have Rafael from MAPFRE Wealth Management. Hello, Rafa.
Hello. Hello to all.
Okay, and then we're having Pedro joining us later on. We have Guillermo and Juan from the accountancy department, and Michael from Almeria is having an emergency driving from Marbella, and he's not able to join us. So again, thank you for joining us. And please click here on the right-hand side to learn more about 720, about the article that we're sharing with you. And I'm going to explain to you just a brief. I will try not to bore you too much. Now, for those of you who are more than 183 days in 2025, this webinar is relevant for you. And for those who you were not tax resident, you will not have to comply with the 720. 720 is a worldwide assets declaration where you will have to disclose certain information. For example, do you have bank accounts abroad Spain, not in Spain, just outside Spain, over 50,000 euros? And even though it's joint, so if you have a joint account for 50,000 euros, or you have in your own individual name, you will have to disclose that information to the tax authority. Number one. Block number two, do you have investments abroad that are not a Spanish compliant bond? Okay, so do you have investment? Do you have stocks, options? Do you have shares? Okay, over 50,000 euros for the date of 31st of December 2025, you must declare the 720 here as well. And then you have, for those who have property purchase price over 50,000 euros abroad, purchase price, okay, not market price. You will have to disclose that information. So there are three forms you will have to comply for those who are tax resident. And you will say, Ignacio, how about if I've done it already? Because we have here friends and clients who probably have reported. Okay, in the article I share with you about the 720, you'll see if you made an earning of 20,000 euros, you must declare it. But you will have to declare it for those investments or accounts that do not comply with the Spanish tax authority. For example, you have a bank account in the UK, in the US, I don't know, around the world, and you did increase that from last time over 20,000 euros, you must declare it. Bear in mind, you don't necessarily need to pay more taxes towards it. Okay, so declaring doesn't mean paying, it means disclosing. Ignacio, what happens if I don't do it? Okay, well, there are certain fines that, depending on the block you're in, for failing to do that, they might send you a fine for it. In the old days, you will know there being very, very high fines that you went through the courts in Europe. And thanks to those brave people who took the tax office through the courts, they managed to get a resolution in the citizens' favor, and now the fines cannot be as big as they used to be. So we're talking about probably 100 to 150 euros fine per block. Okay, right. Ignacio, how about if I did cancel bank accounts, I did sell a property, or I did sell an investment? Okay, for those of you who are in that category, you must declare the 720. Okay, so as it is in normal case, you will disclose that information in the 720, and in April to June, you will file the income tax return. So it's very common. You will disclose from January to March all this information about over 50,000 per block, or an increase over 20,000, okay, or of it, the increase is bank accounts or investment. And of course, not property, okay? Property is purchase price, okay? Now, some of you could have sold your property, and then that disappears out of your investment portfolio. Therefore, that means that you will have to comply from January to March. Now, the people who must comply with that is only tax residents in 2025. For those who you will end up being tax resident in 2026, then you'll have to file these next year, again from January to March. Okay. Now, when you file that information, you will have to do the income tax return from April to June. So if you want to write down your calendar, always 720 January to March, and income tax April to June. Wealth tax, for those who must comply with the wealth tax, because wealth tax depends on communities. Solidarity tax depends on the state, over 3,700,000 euros per person. Okay, and that's a state tax that you can find it in our website, the sliding scale. Okay, sometimes it sounds a lot or a scary thing. When you end up doing the simulation, it might be probably nothing to be worried about. Okay, for those who comply. Now, in this community, Comunidad Valenciana, at the moment for wealth tax, we have an allowance of €1,000,000 per person. And then you have an allowance of 300,000 euros per person on your main property. This gives you a rough idea for those of you who might need to comply with income, wealth, or 720. Okay, right. Okay, you could, if you wish, you could start sending some questions here, and we will be able to answer to them if possible. We have Guillermo here, we have Juan and Jose Manuel. Okay, and now I'm going to pass over to Rafael. Rafael is a very well expert on financial advisor. He's got a lot of expertise on international investments, and he could tell us a little bit about what kind of investments are being reported, Spanish compliant bonds, and which one from his experience will not fit into that category. So this is an exercise we all need to make. I'll pass over to Rafael. Please send us your questions here if we could answer them. And over to you, Rafa.
Thank you, Ignacio. Okay, first of all, let's talk a little bit about Spanish compliant bonds, which is an option that is quite popular for expats. But well, it has its advantages about tax deferral, but that's something you can achieve also through other investments. And then, as a negative point, this is something that you do through insurance companies. So they take your money and they make a very conservative investment, but you have penalization for getting your money back on the first years. So it's an investment that usually gets its benefits when you leave the money for a very long time. So they are mostly thought for leaving the money about 10 years. So if you are thinking about doing an investment from which you are going to need to get some money back uh, after a year, 2 years, 3 years, these Spanish compliant bonds don't work very well. So you have many other investments that, as long as you do it through an Spanish investment company, they will all be reported to the tax agency, and you wouldn't have any troubles with the 720. Okay, and you can also benefit from tax deferral when you invest in bonds or when you invest directly in stocks. You don't pay taxes from capital gains until the moment that you sell them. So we use a lot mutual funds for expats because they can choose very well different kind of investments, the risk they want to have, and then they can withdraw money from day one, and the tax is also deferred to the moment you take money back from the mutual fund. So you get most of the benefits of the Spanish compliant bonds without the constraints that the Spanish compliant bonds have. Also, the Spanish compliant bonds are usually very, very conservative because the insurance companies they have some constraints on where to put your money. So basically, you are better off having an insurance kind of investment like Dividendo Europa or Multifondos Estrategia that you already talked about in a video of your on your website, because these have the life insurance component, but what you get is, in the case of Dividendo Europa, you get a stock portfolio of high dividend paying companies, so European, and they are very stable because they are not growth companies, but well established and high dividend companies. With this, you have an investment on those companies, and you get an annual income from that policy. If you don't want to have an annual income, you have another option, Multifondos Estrategia, which is also a life insurance kind of investment where you have some funds inside, and they are accumulative funds, so you won't have to feel they won't you don't have to feel the tax return annually, and just the year that you get your money back from there. Okay, then you can go directly into funds, which is very efficient from the Spanish point of view and from the Spanish taxes. So as I said, there you have all the freeness to get your money back whenever you want, on the quantities you want, and have a proportional tax paying from the capital gains you have. So for that matter, you talked on your video about Eurocash. Eurocash is a fund from MAPFRE that is ideally for cash management. It's a fund that pays mostly Euribor tax rates. So you are fighting inflation, and it's ideal for some money that you will need to expend on something. Like when you are buying a house or looking for your house and you have some money and some cash on your accounts, it doesn't give you anything back. You put it on Eurocash, and you will have this actually 2% right now. So you fight inflation. You can have your money back whenever you want. You don't have any constraints for time frames, and well, it's ideal for this cash you might have on an account, or this cash you have prepared for for spending on something like your kids' studies, or buying a house, buying a second property, or whatever you have already planned to expend. You can get advantages from 1 day, 2 days, 2 months, 2 years, whatever. You will be having this low, not low risk, but no risk at all because it's invested in the less risky assets of the monetary markets.
Okay, Rafael, I think you're having questions as well here, Rafa.
Yeah.
I don't know if you want to finish up and then get straight into the ones that go directly to you.
Oh, I see this one like, could one move funds from tax-deferred mutual funds in the USA to Spanish tax-deferred mutual funds? Well, I think you will have to pay your taxes in the USA, and then you can move to Spain. And then here in Spain, we'll have to be, if you are a USA citizen, we will have to be picky in choosing funds that are what the US tax agency calls qualified electing funds. So these are funds that let you have a more relaxed taxation on them, and there are funds that do an annual information report that serves the US agency to give you this treatment. Because even though these could be cumulative funds that they don't give you any annual dividend or whatever, the fund must inform you uh, of all the dividends that the fund has gotten from the stocks that are inside the fund. Okay, and you will be taxed on those dividends, even though you are not withdrawing money from the fund and you are deferring all the capital gains. Okay.
Rafael, this is the funds you're talking about is more American funds, or do we have any British as well? Because I remember you mentioning one thing is about doing the tax planning, because you're a no tax resident, you're selling, you're a no tax resident, you pay in the States, for example. Exactly the same if you're in the UK or any other country. But I remember you mentioning that there is specific investments that they're not very well treated by the home country. For example, United States in this case,
Yeah.
they are not treating them well, and that's difficult because some people, because of the golden visa, or because they did an investment provided by the bank or whatever, are not great for them from a tax
Yeah.
point of view in the US, correct?
This is mostly the case for US citizens because they get their obligations to do the tax declaration every year. And then all the investments outside the USA could be taxed quite heavily. So, from three different options of taxation, there's only one that is more reasonable, and it's when you choose a qualified electing fund, and that qualified electing fund makes the annual report for US residents. Okay, in this case, because if you don't go that route, it makes more complicated to declare in the US, and the taxation is heavier. Okay, when you do this, you get a treatment like you would get in the US, but you have to make on your declaration, you have to pay taxes for the dividends that the fund has got from the stocks that are beneath the fund, right? It's only a question of choosing the the fund managers that usually comply with this. And
So,
not
Rafael,
all the funds
I
marketed
think
in Spain
we're
comply
talking
with
here
this.
about some people who might be planning to come over to Spain. I think this is very wise to seek for a specific advice on taxation and investments, just to see options. As
Yeah,
simple as that. That's very good. Now, for those who are already established in Spain, they're going to be much more limited because we're having some questions here. Can I cash that investment? So unfortunately, they will end up paying tax to end up into another investment. If you are cashing because of a different reason, because as Rafael's saying, you're buying a property or you want to have money in two different baskets. Some people wants to have in euros, some people have in dollars. We're having all kind of concerns and questions. That's a different thing. But for those who wants to do a plan and moving into Spain, I really recommend to seek this advice before you even come to Spain, because you'll be no tax resident at this stage. You'll be able to maneuver your investment through your financial advisor the best way and from the best tax manner. And then probably you could have a consultation with Rafael and see what kind of products are in the market, what are Spanish compliant bond, which end up having a high probably profit or good profit for you, and is a Spanish compliant bond. Again, Rafael, the one, for example, in the States or in the UK or abroad, most of them are not Spanish compliant bond. That means that they will have to submit themselves on the 720 if they go
Sure.
over 50,000 euros.
For sure.
Okay. So
Yeah.
now I've got another thing, Rafa. Yes, I have Douglas here. Douglas, I was pending to reply to your question, and you're fully correct. For those who are under the special tax regime, Beckham law, do not have to file Modelo 720. Okay. Originally, when there was no interpretation, when it was first created, nobody said anything about whether you are liable to file the 720. For those who are under a special tax regime, Beckham law, or working remotely, do not have to file the 720. I think Douglas is asking, and I think somebody else was mentioning to me here, saying, Ignacio, do we need to file 720 if we're under the Beckham law? The answer is no, you don't have to. Now, for those who don't know, Beckham law is a special tax regime for those who haven't been taxed in Spain for the previous 5 past years, and they will have the privilege to pay only 24% of the income from work, okay? Work around the world. The rest of the income is tax-free in Spain, and you will be treated as no tax resident with a special tax regime of 24% of tax, okay? Now, you'll be a resident because you might have your immigration in order with your visa if you're a non-European country, or with your green card or residency if you're a European. Plus, you will benefit from the special tax regime if you are complying with its specific tax law of working remotely. Okay, which if you go into a website, you'll see on what we do, you will find here taxes and Beckham law. Okay, for those who might think or might be thinking about relocating into Spain and taking advantage of this special tax regime, which I really encourage people to look into it if they qualify. It's not as easy as it looks like, but if you have all this information and documents in order, you could apply, and then you'll be able to benefit from 24% up to 6 years. Okay. Right. Okay. Rafael, I know you wanted to share with the audience a video that we will put it in the very end when we finish with all the questions. For those who are interested to understand the Spanish compliant bond, the three type of products that Rafael did share with you about Eurocash, MAPFRE dividendo, or investments. But Rafael, this investment that you're dealing with, it will be under a Spanish umbrella, correct? And it will be
Yeah,
a
for
Spanish
sure.
compliant bond, correct?
Yeah, completely.
Okay.
Completely.
Okay. Right. Right. So what we're going to talk here now is now. I think let's start now with Rafa. Let's start now with questions and answer as much as we can. Okay. And then we could help you to answer to them.
For sure, something you said something I think is very important. Before getting resident in Spain, plan a meeting with us and let's see the situation and let's do all the research we can do before something changes. Because anything you want to sell, it's better if you, at least if you are a USA citizen, it's better to think of it before you are a Spanish tax resident, because you don't lose the obligation to do taxes in the US. So you can you can benefit from taking some decisions before you get to be a Spanish resident.
I mean, actually, I would like to share, Rafael, from the experience that we managed to have with clients. At the end of the day, we're here to get the best out of it for you. And the sooner we get cracking on things, the better, because
Yeah.
you're the only one who will benefit from your situation. Now, I remember having a conversation with Rafael about what is compliant and what is not. And you might be thinking, okay, we're going to come to Spain. Let's say I'm going to get the golden visa. It's not the case anymore. I have these investments. I'm resident in Spain, but unfortunately, it's not good for your home country from a tax point of view. Correct, Rafael? So
Yeah,
probably
well,
this is so.
that's mostly the case with US citizens because all the other countries are less picky with this, you know.
Okay, okay. Right. So, to be honest with you, um, is I just I'm able to see you guys when you have a problem or when you are trying to prevent having a problem. Okay. I
Better
will
in this second option,
I
so
will
we can
prefer
advance.
you to contact us or anyone of your confidence before you have a problem because we're talking about saving a lot of money from a legal point of view. And lack of knowledge might make you fall into a situation which is not desirable for anyone. But anyway, it's just some tips of advice I like to share with you as we move on with all you guys through your path coming to Spain. Because again, if you're coming over to Spain and you become tax resident, you need to understand your specific scenario. Okay, it doesn't matter your neighbor, it doesn't matter the others or rumors or social media sometimes, which is confusing. I really encourage to have your individual. Now, let's jump on here all the questions. Okay, and do you want to start, Rafael, with any of you, or shall I just start from some of them?
Please go ahead. I'm looking at them and try to see if there are some things we can have an answer for. But
Right.
I see mostly are
Okay. So
questions
you just run
for you
through
guys.
your side, and I will jump on. So because we're
Okay.
having a lot of questions. Now, I know here we have in someone actually, Keith, just sold a property in the past. Okay. Now, if the investment that you made was a property, purchase price was over 50,000 euros at the time, and you're a tax resident in Spain now, you must file 720. Or when you sold it, you should have declared it. Okay. I know there will be people that didn't do their homework at the time and they needed specific advice on how to update it now. Okay. So kids, the answer to it is if you sold the property, you had the obligation to report it. And it didn't report that you had more than 50,000 euros. Okay. Now we have John. If someone tax resident throughout 2025 sells their home in Spain in November and returns permanently to the UK with their proceeds of the sale, must they still comply 720 by 30? Right. Okay. Okay, John. We only, I mean, remember, it's not about Spanish assets. It's about if you're a tax resident in Spain and you have assets abroad over 50,000 euros. Okay. So whatever is in Spain, whatever investment you have in Spain, you don't need to do 720. And Beckham law beneficials, okay, beneficiaries. For those who are 720 compliant, which are tax resident in Spain with assets abroad, not applicable for the Beckham law, okay? Okay. Okay, Rafa, do you have anything here?
I know I'm seeing questions that I see more for you because are of the kind of what has to be declared on the 720. What about if I have been here 183 days? Do I have to fill
Okay.
that? So
Okay, let's move on then. Right. Then we have here Deborah. I have a Deborah here. I mean, Deborah, basically, we need to declare it. So all the investment must be declared according to the value on the 31st of December of last year. Okay, so you need to comply with the average value of your investment last quarter of 2025 and the value of the investment on the 31st of December. And for those investments that are not Spanish compliant bonds, for example, you will hear from your financial advisor here. Prudential. Prudential is Rafael Spanish compliant bonds. I don't know if you heard about it.
yeah.
Prudential, they do. And there is another ones that as well that reported. Okay,
Mhm. Yeah.
so so this is a situation. Okay, what else we have? Mm, I have here. I have a lot of. So again, 31st of December. Okay, remember the value over 50,000 euros. Okay, and if you have bank accounts with your broker abroad, bank accounts, yes, that counts as well. And I don't know if there is anything missing here. Okay. Okay. I think we are. Now we have for those who have questions about non-lucrative visa from the US. Okay, if you have a non-lucrative visa, doesn't necessarily match anything with the Beckham law. Okay, there are two different things. Non-lucrative visa is a visa that you are granted to live more than 6 months, more than 183 days in Spain. Okay, and obviously doesn't mean that you will qualify with the Beckham law, because for the Beckham law you need to work, and the non-lucrative visa you are not allowed to work. Okay, so that's another questions. Yeah. I mean, at the end of the day, it is important to do tax planning. You guys are coming from a lot of countries I've seen, uh, and it's got a lot of value on doing all these exercise. One thing, obviously, you need to find the best investment possible, then which makes your life easy or as easy as you would like to have. Three, if it's Spanish compliant bond, great. If it's not an issue, but you need to know what consequences, as Rafael said, for example, those who are Americans, bear in mind some investments, even made in Spain, might not be beneficial if you're thinking about going back to the States and being Spanish compliant, sorry, American tax resident again. Okay, so there is certain things that we need to yeah.
Ignacio, let me add that even if you're not planning to go back to the States, the investments you choose in Spain, they have to be cherry picked because it will make your life easier reporting to the USA. Because USA citizens don't lose the obligation to do their taxes in the USA,
Okay,
even if they
right.
don't go back.
Let me just do a summary here. Probably is useful for you. Sometimes I think I repeat it many times, but I get so many questions and I like to insist. Okay. For those of you in 2025 who spent in Spain more than 183 days, you are supposed to be Spanish tax resident. Now, why do I say that? Because it will depend on your visa as well and the amount of days you spend in Spain. Okay, so that is very important. Okay, your visa, your permit to leave, when you've got the permit to leave, if you did leave more than 183 days. Now, two tips of advice here. The second tip of advice, depending on where you are from, I mean, I know that people are contacting us from all around the world, even Canada, Argentina. Just double check the dual taxation treaty between Spain and your home country. Okay, that's important as well to know how it's going to be treated. Okay, and then obviously do tax planning. Do tax planning to know what is best. Okay, sometimes it's better not to do nothing, not to do anything, but it's good to have the information and carry on doing the investment strategy. But don't be afraid and worry about the 720. 720 is just a self-assessment declaration form that tax office meant specifically in 2013 for Spaniards. A lot of Spaniards used to have accounts abroad. Tax office will never know. The different countries will not share that information, and therefore tax office didn't know. So that was the really aim. I know a lot of expert community said or was a bit offended because of this situation, and we had a lot of issues with the 720. They took him to court, and now the fines are very reasonable or minimum. Okay. Now, I have questions as well. Public pensions, you don't need to do 720. Private pensions, as long as you could withdraw them anytime, yes, you must file it. For example, if you have an investment that you cannot touch it because of your age, you didn't reach 65, then if you cannot cash it, you don't need to disclose it. Now, when do I need to disclose that information? Whenever I'm able to take money out. Okay, could I sell a property? Yes. Do I have a property over 50? Yes. Okay, I do. Investments, do I have investments abroad? Do you have stocks? A lot of you might ask me, Ignacio, do I need to provide you every specific investment or just the umbrella? Okay, well, the more information you could give us, the better. But normally you will be dealing with your financial advisor and he will provide you the umbrella and a certificate. And we need to have the information by the 31st of December. Okay. Okay, more questions. I really think we did cover most of it on the 720. So remember, over 50, 3 blocks. If you already are a tax resident, as I'm having here some clients and friends that they're having, if it went the investment over 20,000 euros, but not Spanish investment. For example, I know that some of you are making a lot of very good money with specific investment. For example, MAPFRE Dividendo. I understand, Rafael, MAPFRE Dividendo is in Spain. MAPFRE is reporting, and it will appear in their records. So if the invest broker is disclosing, you don't need to report it. Correct, Rafael?
Correct. And mostly everything you do through a Spanish financial institution, as long as it's registered financial institution and a legit, it will be all reported and you don't have to feel. Okay. Stephanie was asking that she has a teacher pension and if she will have to tax that pension both in the USA and in Spain. Okay, she will have to declare in the USA if she's a Spanish resident. As long as I know, she will have to declare it in the USA. She will have to be taxed in Spain, but the double taxation convenient will prevent that she pays twice.
Correct. I mean, you will never end up paying double or twice. Remember, civil service pensions are exempt from the Spanish tax office. Okay, so the question, I'll go back to you. You're a teacher, but my understanding that you're having a public pension that comes from the government because you were a teacher, like a fireman, like a policeman, all this money is not taxable in, well, you need to disclose it only if there is more income. Okay, it's a bit more complex than this. But for example, you have a 20,000 euros pension from teacher's pension, and then you have another extra income that goes over 15,000 euros, then you must comply and declare it. Doesn't mean paying tax, but I need to put teacher's pension, the amount, and it's tax free. But the sliding scale that you're going to end up paying on the other one will be taking into account the two. Okay, so the marginal rates will be higher because they know you have two. This is not tax here, this is tax in Spain, but only if the second one goes over a certain level. For example, for you to know over 15,000 euros on income from work, you are obliged to disclose it. I mean, I'll have to double check whether this year they did update it. I don't know if Guillermo or Juan could confirm whether this year they are increasing over 15,000 euros. But this is from last year. Okay. At the end of the day, the whole purpose of this webinar is for you to get as much as possible out of it. And I always encourage to go and do specific, okay, because we cannot cover everything here. And it's always good to have this specific advice. But yes, here we're having moving to Spain, UK state pension. Well, the state pension is taxable in Spain. The social security pension from the state is taxable in Spain, but allows you to deduct it in Spain, whatever you pay in the US. Okay, it's general practice what we're doing for our clients that you ask for an extension in January in the USA through your CPI. Then we file here in Spain. You file here in Spain, and then you pay two-stage payments, 60% on the 30th of June, 40% on the 1st of November. And with that income tax return, you provided to you, I think you call it CPI, in the States, and you deduct whatever tax you've paid. Okay? So this is something for you to take in, okay, and discuss it. Now, another good thing, I could give you a good piece of advice here. When you come from one country and you go to a different country, always, if you have things in place, keep your files before coming here. For example, have a tax certificate to protect yourself. So you're being a tax resident in the States, you could have a tax certificate or information. So, I mean, no of us, we are exempt from being investigated from the tax office at any time. All this is self-assessment, okay? So 720 is self-assessment, income tax return is self-assessment, and wealth tax self-assessment. They will probably go back to you, ask questions, and ask you to provide documents. Piece of advice, keep everything filed at least for 4 years, okay? Now, the exchange rate that we are using to report is according to the tax office on the 31st of December, the official one, or you're able to use the average of every month. For example, you're getting paid every month. Well, that amount of money that you're getting in your bank, we could use that. Okay. Okay. I know you might have a lot of questions about tax. Again, I encourage you to do everything before it's too late, okay? Because April, May, and June, we all go crazy trying to submit income tax return. We're busy, everybody gets stressed, etc., etc. So try to work before everything, okay? That's another piece of advice I recommend. Rafael, I think, are we missing anything else, or do you want to just start sharing with the video?
I'm seeing a lot of questions about public pensions right now that have arisen.
Yeah. Public pensions, again, are tax-free in Spain, and you do not need to report it on the 720, okay? Remember, you don't need to report it on the 720 public pensions. private pensions that you could withdraw it anytime if you like. I know some of you say, no, you will never do it because we need to pay tax and it's too much. I agree. But if you're able to withdraw that pension, like an investment fund, you must report in the 720. And I'll tell you something else as well. If you decide to go back to your home country and disconnect you from the tax system in Spain, that's it. As simple as we are informing tax office, you decide to leave Spain, you will register in another country, will provide that you're a tax resident in another country, and that will be the end of it. Okay. So at the end of the day, don't worry too much on this as long as we could do all these things in order. And John, yes, you could contact Rafael direct. We're going to share with you here in the chat his email address, and you could organize specific appointments with him. And you could do specific appointments as well with us for the tax planning. If you need to do appointments with all together, just mention the secretaries and we could do the specific because I really think it's worth it. Okay, either through us or through whoever you trust. Okay, but it's important. It's good advice. I don't like saying problems, but if we say it, we'll be able to help as much as we can. Okay, now Rafael, any other outstanding question in here that we might end up, or I think we cover it?
Mostly, but Stephanie also raises a question. Can talk about taxes with regard to selling or renting your
Yes,
house in the US.
yes. Remember, now as well, the 401k IRA retirement accounts, yeah, we need to disclose them. Okay. Um, um, I know you have penalties to withdraw it, but we need to disclose it because I know you wouldn't withdraw it because it's not efficient, but you're able to do it. Again, remember, disclosing doesn't mean paying necessarily tax. Okay, this is something that you need to know. But don't panic. I always say, do an appointment and double check, okay? Because I know tax is quite scary, not knowing is quite scary, and rumors are terrible sometimes, okay? But as I said, don't worry. 720 is a self-assessment for tax resident in Spain, okay? And non-resident do not need to file anything at all. Okay, is a different subject, non-resident. For non-residents, for those who are less than 183 days, for those who might end up having investment here as a no tax resident as well. I don't know, Rafael, do you deal with non-resident investments as well?
Yeah, sure.
Okay, so you're able to do investment for non-resident who wants to have some money here.
Yeah,
Okay,
that's it. Yeah.
in
And they
Spain.
have a nice treatment and the double taxation convenience applies there. So they won't have many retentions on some of the investments will be exempt from retentions. So they can just report in their home or tax country without any problems and without having money that has been gotten from Spanish tax agency.
Okay. And I'm going to share with you, even though I encourage people to go through the links that I'm giving you on the website. We spend a lot of time drawing articles, giving you good information, even though it might be a bit general. Okay. But just before we do appointments, just double check taxes in Spain here, for example. I'm going to share with you income tax return in Spain, how it works, who needs to do it, etc., etc. I know it's not the topic today, but inheritance tax is, especially if you are in this community, Comunidad Valenciana, at the moment, you have 100,000 euros allowance, then on your main property, 95% of that main property is completely reduced, the tax, and whatever is left, whatever tax you need to pay, 99% is exempt for those who live on your will from husband to wife, wife to husband, partners legally registered in Spain, and children. Okay, so from group one is very good at the moment. I mean, unfortunately, the tax laws change, and probably next year it doesn't happen, or it will happen for hopefully for many years. Okay, we didn't touch much here, obviously, because it's not the topic today. The inheritance tax and wills, we could cover that in a later stage, and we could discuss the options as well about Rafael, if they have an investment, could they name beneficiaries in the investment as well, treat it like an insurance with more allowance and etc. So there is a lot of things that we could talk through. Now, I know we are having more specific questions that probably we did share with you the email from Ramón, Rafael, and then myself. Unfortunately, Pedro didn't make it, but we have Guillermo, Juan, and Jose Manuel with us. We're going to leave you with a nice video that Rafael did create to explain 3 types of Spanish compliant bonds that probably might work for you or might not work for you, but is always talked through openly. And again, feel free to contact Rafael, or if you need to speak to me, just please contact the office and they will be able to provide an appointment. Okay, I thank you for being here with us. I pass it on to Juanfran. Thank you, Rafael. Thank you, everyone.
Thank you.
Hopefully see you soon in our next webinar. Thank you.
Thank you.
At Pellicer and Heredia, we help our clients protect, structure, and grow their wealth with clarity and confidence. Today, we'd like to introduce 3 MAPFRE investment solutions designed to meet different financial needs. In today's financial environment, relying solely on traditional savings is no longer enough. With interest rates shifting, inflation still present, and markets moving fast, investors need solutions that offer security, flexibility, and the potential for growth. Think of it like open water. Conditions change without warning, but with the right structure, you can keep moving forward. MAPFRE AM Eurocash FI provides a low-risk and highly flexible way to manage cash. It invests in high-quality, short-term euro assets such as government debt and bank deposits, with daily liquidity, next-day access to funds, and the potential to benefit from short-term interest rates. For investors looking for income and long-term growth, MAPFRE Dividendo Europa offers access to some of Europe's strongest dividend-paying companies. A carefully selected portfolio of leading Euro stocks 50 names, chosen for their ability to deliver sustainable dividends, with the added insurance protection of a unit-linked savings structure. And for those seeking diversification with active risk management, MAPFRE multi-asset strategies provide professionally managed portfolios that adapt to changing market conditions. By investing across multiple asset classes and offering different risk profiles, from cautious to growth-focused, these strategies aim to smooth volatility while capturing opportunities across global markets. Together, these 3 MAPFRE solutions help investors manage liquidity, generate income, and pursue long-term growth, all supported by professional asset management and disciplined risk control. At Pellicer and Heredia, our financial advisors will help you identify the most appropriate solution or a combination of solutions aligned with your objectives, your investment horizon, and your risk tolerance, while carefully considering scenarios and tax efficiency.